The Kaiser Report. I'm Max Kaiser. It's time to talk with the man in white, Gerald Celente. Gerald, welcome back to the Kaiser Report.
Oh, thanks for having me back.
Yes,
it's great
fantastic.
To see you, man. Yeah.
Gerald Celente, of course, you are the editor of TrendsJournal.com, where you can find the quarterly Trends Journal for information about the most important trends shaping the future. And I guess the first question, Gerald, the stock market has been extremely volatile. The VIX, the volatility index, had its biggest surge ever, indicating fear and unrest. Are we in a 2008-like scenario? What happens from here? How would you make that comparison?
Why, I say it's a buying opportunity. That's what they're all saying on TV. No,
yeah, good buy house, good buy car.
Yeah.
There's a lot of good buys, yeah.
The reality is that there's a global meltdown. And the markets are just an indicator of you have crashing commodity prices. You have plunging currency prices. This whole thing, as you well know, you've been talking about it for years, as we have, it was all propped up with fake money. There's no recovery, it was a cover-up. The volatility is real. Look, we've both been around a little while. Who's ever remembered a summer like this? This is summer.
The Son of Sam killings in the summer of, I believe, the 1980s comes to mind. It was very hot, and a lot of people were getting murdered, and there was a serial killer loose. Here we have a new serial killer. Her name is Janet Yellen. She's holding the global economy hostage, and she's pop, killing economies, creating Ponzi schemes. She's out of control. Who's going to save this? You got the white suit. You're the man on the white horse. Why can't you ride into town and say, you got a whole conference coming up in Kingston, which is a town you virtually own. It's called the Peace, Occupy Peace. Why can't you take over, Gerald? Please, we beg you.
So the reality is, as you well know, it's just they have not raised interest rates, what, in 10 years, going on 10 years?
Yes.
And the big deal is, are they going to raise them in September? And if they do, it's going to go up, what, 25 basis points won't mean anything.
No.
So it keeps the Ponzi scheme going. But even at that, they can't keep the Ponzi scheme going because the global economy is collapsing. Because when you saw all of this money rushing in, it went to these emerging markets. And now the emerging markets are submerging. So you have Brazil, as you look back at the end of this week, look at their currencies, down to 37-year lows. They're back in a recession. Canada, it's not so far away. They're in recession. Look at the Aussie dollar. The Canadian dollar's now down to what? 2004 lows. The whole thing is collapsing. And the reality is that they talk about raising interest rates and what they call it, normalizing it, right? Normalizing interest rates, which by their own words means they've created a super abnormal condition. A bunch of abnormal freaks created an abnormal position in the marketplace, and now they're talking about normalization as though they're going to create it when they caused an abnormal situation.
There's no cure for global financial herpes.
None.
No. Now, you mentioned the emerging economies are getting a lot of attention. They were the beneficiaries of a huge influx of capital. They then have gone belly up. But there's a lot of flight capital now from China, Brazil, and these other countries that are leaving, and they're jacking up prices in New York and London in the real estate market. And so the policymakers and the talking heads on television will point to rising apartment prices in London and New York and say, aha, the economy is recovering, without indicating that the money that's forcing those prices to go up is escape or flight capital from the global economy that's crashing. So they're looking at one piece of the puzzle and drawing a conclusion that does not reflect the reality of the global economy. Is that a fair statement?
It's accurate because it's the same thing what they do with the equity markets. They use the equity markets as the gauge for a rising economy. So they're talking about that 0.1% with the dough that's fleeing these other countries where their currencies are collapsing and their commodities and their economies. I mean, look at the numbers coming out of China. You know, everybody's blaming China for this slowdown. China's only the canary in the global equity mine. Because if the United States and Europe aren't buying things, China's not making them. If China's not making them, all these resource-rich nations aren't selling natural resources to them.
Let me ask you a question about China, because they've taken an interesting approach to supporting their market. Instead of printing money, they're arresting journalists who say that the markets might be at risk of going down, and they are shooting or executing bankers. And it's a very different approach in the communist version of capitalism than in the capitalist version of capitalism we see in America. This idea of prosecuting journalists that suggest that markets are overvalued. I mean, going back a couple of years, Gerald Celente, I don't know if you remember the story, but there was one analyst on Wall Street who said Enron is overpriced. And the CEO of Enron, Jeff Skilling at the time, had that analyst fired. Shortly thereafter, Enron blew up and caused global consequences. They shoot the messenger. Here you have people in journalism in China that are pointing out the obvious, that the stock market is a bubble and it's popping, and they're arresting those people, they're prosecuting those people. It's a weird combination of communism meets capitalism. This could be the next cultural revolution. I think the new Mao is the Central Bank of China, and the consequences could be another 100 million people are wiped out.
It's not capitalism here either. It's fascism. It's the merger of state and corporate powers. Not only are they taking the prisoners for the journalists, if you sell short, we'll blow your brains out. You're not allowed to over in China. But look what happens in the States. The markets open up on a down note. We have Rule 48. What's Rule number 1 to 47? How about letting the market do what it's supposed to do? Who's making this up? They're rigging the markets in front of us. Our guys are not supposed to lose.
Rule 48.
That's what I got, Rule 48. You know what Rule 48 is. I think it's like the 11th commandment. I mean, you know, it's right in there. Moses came down with it.
Well, I remember back in the crash of 1987, up until then, they had standard procedures for stopping trading in stocks. It was halt trading because there's an order imbalance. Then the specialists on the floor would rebalance the book. They'd open up the stock at a price that would clear out the orders, and you'd resume trading. Then you had the crash of '87, and they introduced all kinds of new technology like trading collars and other types of ways to try to control that beast that they are feeding with all that cheap money and faulty accounting and stock buybacks. Now, in 2015, we're at the point where they're referencing something, Rule 48. They've enacted it dozens of times, several times in the past week. It's so arcane and so esoteric and so beyond the pale and so unrelated to anything that the point I'm making is that it really has become a merger, as you say, of state and corporations and bankers. And this is the new fascism, Gerald Celente. You've talked about it in your Trends Journal many times. We are facing a new form of fascism, which is defined as merger of corporation and state. But it is slightly different. It does have slightly different characteristics and a slightly different flavor. So can you just build on that a little bit more so people understand politically in the context of what's going on?
We're headed for a collapse. It's going to be, we believe, as bad as the Great Depression, and it's much worse because there's combinations building on top of it. Look what's going on in Europe with the migrant situation. They're not migrants. These are people that are refugees from countries that have been bombed out by the United States and its coalition of the killing. Syria, Libya, Assad has to go, Gaddafi has to go. Who are these madmen to say that? Look what they've done. So now you have Libya, you have Syria, you have Afghanistan, Iraq, now Yemen, the United States and Saudi Arabia, United Arab Emirates, bombing the hell out of the poorest country there. So you have this escape coming into Europe. Now, pile on top of that a global slowdown of commodity prices. They're flooding out of Ghana, they're flooding out of Nigeria, Algeria. Go south of the border. Look what's going on in Brazil, look what's going on in Venezuela, Colombia, Chile, Bolivia. The people are leaving these countries as the economies are collapsing, as natural resource. Here, commodity prices right now, according to the Bloomberg Index, are back to 1999 levels. So now, pile on top of that civil unrest, wars developing, you have a situation of social and geopolitical unrest that the world has never seen. Just to put this into context, it took 100,000 years to 1900 to put 1.6 billion people on the planet. In 100 years, 5.2 billion added on. So now you have all of these declining countries, all of these countries destabilized. You have a problem that no one knows how to deal with, and it's going to get much worse as the economies decline and as wars increase.
Gerald, you mean 2 + 2 = 4? You mean to tell me that if we bomb countries for political reasons, misunderstood or miscalculated or opportunistically, that the resulting flood of migrants is a direct result? Can we develop a metric that would suggest the number of migrants per drone? In other words, and bomb. So you have X number of bombs, X number of drones. You take that number and you figure out the migrants that are the result of each bomb. Can we develop an index like this over there at Trends Journal? It's called the Bomb Migrant Index of Global Population Movement. I mean, you drop a bomb, you get migrants. 2 + 2 = 4. If you bomb somebody's house and they've got no place to live and their economies are crashing because you've got occupying forces from central bankers around the world, they're going to migrate.
Not one piece of coverage in all of the major news around the world is blaming this on the United States, on France, and its coalition of the killing, with the UK, that have destabilized this whole area. All they're doing is calling it a migrant problem and how to address it, rather than looking at the cause. Because, as you well know, what is it? 6 companies control 90% of all of the media in the United States, so it's the prostitutes at large selling the lines coming out of Washington.
Right, and if you can, we can stay, maybe do another segment.
Oh, I'd love to.
Okay, and we're going to talk about negative interest rates and the phenomenon of negative interest rates. That's coming up shortly. And but before we jump ahead to look at these other issues, we still have you here for a bit. How does this 2015 period compare with 2008? How do you make that comparison?
Much worse, because of the bubble that's been created. At least in 2008, and that bubble was going up, it's spread among the people. But now you see the wealth gap. It's the largest in the United States, worse than it was during the Gilded Age. And worldwide, what do you have, 85 people that are worth that have more money than 3.5 billion people? 400 people in the United States are worth, what, $2.25 trillion? So it's much worse because none of this has been spread out and everything's been going down. Here, the median household income in the United States has lost $6.5 thousand in general since 2007. It's down $6.5 thousand median household income.
Right, so that means that the entire theory of how to run this economy has completely failed, and the solution is to do more of it. Anyway, stay right there. We're going to do a second segment to follow up more on this. Gerald, we'll be back to you. Thank you for being on this episode.
Thank you.
That's it for this episode of the Kaiser Report with me, Max Kaiser, and Stacey Herbert. I'd like to thank our guest, Gerald Celente.